Good morning, everybody. How's everybody doing? March 31st. It's a Friday. It's the last day of the month. It's the last day of trading for the month. Everything's wrapping up today. We've got the quarter end. Everything is just it's a nice end on a Friday. It's like perfectly ending on a Friday. There's no Saturday. It's not like March 31st is tomorrow. It's all ending today, Friday, last trading day of the week. So good morning. Good morning, good morning, good morning. Let's see who's in the chat with us here this morning. And of course, what we know we've got to do on today's session is we're looking at the economic calendar, of course. We know that we're waiting for 8:30 core PCE to come out before we start doing any major analysis of the ES and our broad market indexes. In the background, as an FYI, this is we want to go with this tool. This is an ES chart on, of course, none other than the 5-minute time frame chart, 5min. Okay, so we'll let that simmer in the background as we be patient for the next 12-ish minutes, 11, 10, 12-ish minutes for PCE to come out. This is the Fed's preferred measure of inflation, of course, and as of right now, the forecast is for a 0.4. That's the expected sort of number. There have been many news articles that have came out and said that PCE is actually going to come in much hotter than the expectations when you sort of annualize the reading. So we'll see how that unfolds, but for now, what I would imagine is if PCE month over month comes in at a miss higher, market's not going to like that. Market's not really going to like that. The Fed will obviously have to continue to be more hawkish in their stance, and rates will continue to go higher. I think what the market's trying to find is the sweet spot. The market, from a fundamental perspective, is trying to find the sweet spot between a Fed pause or like a minor rate hike, something like this, right? The market's looking for the sweet spot here where it's not aggressively pricing in rate cuts, because this, as we know, signals something is terribly wrong with the market. And the rate pause is really more indicative of like, okay, these are semi-sustainable levels. Let's hold it here for a bit, make sure that these numbers truly do come down under control, and then we'll start on the back half, whatever, something like that into the future. So where is the sweet spot? I don't know, but the market doesn't want an overly hot read on PCE. Of course, if it does come in that way, I expect we see some downside. If PCE comes in as expected or better than expected, good news is good news, or at least I would think so in this environment. Good news is good news, and we can look for possibly some upside in the market. So just kind of a preliminary thought process about what's going on there. 9:45, we'll get Chicago PMI, 10 a.m. consumer sentiment, and Fed speaker at 10 as well. Or excuse me, geez, my goodness. 10 p.m. What am I saying? 10 p.m. So while everybody's out and about doing their thing on a Friday afternoon, Waller will unfortunately be speaking. Who cares? Right? Doesn't matter. Doesn't matter. We'll reassess the price action come, Saturday, Sunday, into Monday. Anyways, that's really what's in the mind's eye of the market. It's all about PCE right now. What is the number going to come out as? And if we just take a quick look back through recent history, we'll remember that last month was a massive upset. I say upset as if it was like a sporting event or something, but it was a big miss. The expectation was well under what the actual PCE was, and I don't really think we can afford to experience something similar. Right? So that's what we've got underneath there. So we'll just leave the chart up in the meantime. Now, who's here with us in the morning? Michael Cobble, good morning. We've got INF the Based Homie, Bert Wolford, Davey Day Trader, Risto's here, Katie Baby. We've got David Ball, May, Ryan Speed, MFG Sosa. We've got Roger Tutt, Swipe, Michael, BMW. That's Buckminster Wallace, of course. Lioness, Rebecca F. We've got DP, Jeep for Life, Thule, Brian. Tony's here. Leroy O'Neill, good morning. We've got Rourke, good morning. V. Sanchez, Jerry, Steve Lauver, excuse me. Probably still butchering that one, but Steve L. Who else is here? Stevie J, John Cardozo, Ketchup Kings, Chris C, Paul, Capitalist Dog, Victor Y, Chowman, Carl Jones, good morning. Sammy Campbell, Byron Jones, Gregory Rulo, good morning. Who else? Sandman, M. Spears, John Wilkening. Siege is in the building. Who else? Green names. Starlight, good morning. Cool. Dala Jeezy's here. Or Dela Jeezy. Jay with the gold cash bag. Cool. So we know that we're being patient. We're keeping it low key this morning ahead of the 8:30 announcement. We don't want to get too far ahead of ourselves with price action analysis in the ES before the number actually comes out for core PCE here. Obviously, we should experience a little bit of volatility when those numbers are released, depending on how we're doing in comparison to the expectation, the forecast, which as we just discussed is 0.4. Okay. So we know that. Let's continue along here and briefly peruse through some headlines. Futures are mixed this morning with the NASDAQ down, but Dow and S&Ps are up. Oil is up. 10-year is up as well here at the very end. Looking for some stock-specific stuff, considering the big headline there. We'll keep politics out of this one and go to stock-specific headlines only. Virgin Orbit fails to secure funding and will cease operations and basically have to lay off the entire workforce. So RIP Virgin Orbit. Virgin Mobile, I suppose, will continue. What else is going on? Stock-specific stuff. Downgrade to the China companies. Is this Baidu maybe? I can't really... Oh, no, JD. JD catching a downgrade from Loop. Loop downgrades JD. Biggest movers pre-market. Bed Bath & Beyond, Nikola, Virgin Orbit, and more. What else is going on here? Stock-specific stuff. Disney blocks some power play with a royal family clause. I don't know how that exactly will impact Disney. I think doesn't this have to do something with the amount of taxes Disney's paying on the land that they own? I don't know. I could be getting this one wrong. So someone can let me know in the chat. I thought that had to do with how they were taxed. Anyhow, a recession may be coming, but Kramer says he's not seeing the early signs yet. So I don't know. If you want to inverse them, buckle up. Should be a bumpy ride. Ford hikes prices on its F-150 Lightning as production resumes after an EV battery fire. If you recall, they had to, take a net loss of, I thought it was 2B, as in billion, to get into the EV industry, and now they're trying to probably pick up on the back end. Hey, we've got to kind of up the price of this thing if we want to have more of a sustainable business model to venture into EV as a space in the whole, specifically with the truck, right? So F-150 Lightning, gonna raise prices there. Morgan Stanley says a beauty stock is gaining momentum, can jump nearly 20%. Now, you can see ELF in the little thumbnail here, but I've never heard of ELF as a public company. I don't even know what that is. It looks like they make, what is this, face stuff? But does this mean like Ulta is going to catch some tailwinds from that as well? Ulta, for those folks who don't know, but Ulta is probably the best, I would say, like personal makeup stock to trade. The price point is fantastic on Ulta. It's a nice expensive stock. It's got good options. When it's moving with some fundamental news, with some sort of catalyst behind it, definitely worth watching Ulta. So anyhow, what else is going on? So contrary to Kramer, Mrs. Orman here is saying that a recession is looming. It's key to have an emergency savings account. I should kind of have one of those anyways at all times, I would suppose. What else is going on? Stock-specific stuff. UK's Rolls-Royce brings a new CFO on board, makes leadership changes. Yeah, kind of interesting. Not really impactful for our markets this morning. What else? Stock-specific stuff. Nikola, 100 million stock offering. Wouldn't touch that stock with a 10-foot pole. What else? More home sellers are sitting out of the spring housing market. No one really wants to sell, right? If you've think about it like this, this is just, obviously people have had this take. I'm not saying I'm original for thinking this way, but just relaying the message, so to speak. If you were someone who bought a house and have a mortgage at 3% or better, then why would you want to sell right now and then take on a mortgage at, 6? What are the rates even at right now? I'm not familiar. Maybe it's 6, 5 something percent, right? Why would you want to take on that extra payment in, if you have one of these? This is like a gift right now. So anyways, what else? B of A's Andy Siege is joining Citi as the head of global wealth, and that's the last thing we see on the headlines here this morning. We've still got about 3 minutes to go until the PCE number comes out. Nothing crazy here on the headlines front. No big upgrades, no big downgrades to the companies that we're typically watching. Here's the earnings calendar, just as a brief reminder that there's absolutely nothing that was worth paying attention to after the close yesterday. Maybe Canoe was worth watching. I didn't even see what happened there. Maybe we could do that now. There's nothing before the open worth watching. So Canoe, isn't that GOEV? Isn't that GOEV on the ticker? Let's go GOEV over here. I believe this is Canoe. I might be wrong. You can let me know. But I thought this is GOEV. Yeah, earnings. Boom. What's going on in the pre-market with it, though? So let's grab some extended hours. A little bit of a downdraft, but kind of unchanged. Around 61 cents. It's a penny stock. I wouldn't, again, nothing to really do here. I thought it might have been a little bit more impressive being in the EV space, but nope, nothing happening. Absolutely nothing happening. Let's go to our default screen here, which is the S&P's pre-market, and we'll go back over here to the ES. And with about a minute and a half to go, we're starting to get a little bit of volatility in our futures. In the grand scheme of things, so we'll just go up to a 4-hour chart to get some general context first. In the grand scheme of things, right, as we're wiggling around here, nothing crazy is happening. We're still just at these local highs. We're underneath this pivot high. We're underneath this balance. If you want to call this a balance, right, we're still underneath that. Nothing's changed dramatically on the 4-hour. I would make a general comment that, yes, we have produced a higher high. That does start to neutralize the trend here. The next higher low pullback that we get is going to confirm a new 4-hour uptrend. This still, I would really classify in isolation as just an hourly uptrend in the context of this overall move, right? So you can see how from here to here, we've produced kind of a higher high. Even if you want to count that upper wick, higher high being produced, kind of making equal highs to this area in here, starts to neutralize the 4-hour downtrend. This shouldn't really come as much of a surprise. This is everything that we sort of talked about in yesterday's stream. So let's go back down to a 5-minute chart and start to prep for what could be unfolding here on the PCE announcement. So let's go back on over to the calendar, and we'll just be prepared to refresh this in a moment. So starting to get some volatility coming in. 2 seconds, 1 second. The number should be out now. Big red bar to start things out. But I mean, in the grand scheme of things, it's not really that big. We're just seeing some volatility here. Remember it, folks. This is a 5-minute chart. We're looking at a 1-point increment on the y-axis. It's not doing anything impressive yet. Really just kind of hanging in there sideways, to be frank with you. So as this wiggles around and kind of remains unchanged, I would have to imagine that the number may have come in at the expectation. Did the number come in at the expectation? That would be my expectation based on what's going on with the market's reaction. There was no, sell it, sell it, sell it, sell it. Things suck here. There was none of that. As of right now, actually, we're getting a little bit more of a significant push higher. But let's give this a refresh and see if my general feeling towards the market was correct. Refresh, click the little green button, and what do we have? Oh, come on. Come on now. You should, 0.3, better than the expectation. Okay, so pretty good, pretty good. You could make the argument all day long that the numbers are cooked. You've got the chefs out back whipping it up and, serving it up on a silver platter here, but, I think that's a jaded way to look at the market. You could say whatever you want, but at the end of the day, it really all boils down to what's going on here with price. So we came in under the expectation. What does that mean? It means that the Fed's fight against inflation is working. It is also a potential suggestion that we are, closer to a pause as opposed to a hike in the next meeting. So it doesn't guarantee that we will go into a pause. There's still the opportunity for a hike, but this, of course, would fall firmly into data for the pause camp, right? Saying, hey, inflation's coming down. It's coming down. So regardless, again, the numbers don't really matter so much. It's really the market's reaction to the numbers that matter. So now that that's been released and we've got some semblance of what's going on with price, let's do what we do best and make some adjustments here and run through the price action and technical analysis for this morning session. So we'll put the overnight high to its rightful position up here at 40.9850, and we will zoom out to the 4-hour chart. And again, I would just point out, not a whole lot of change has happened on this basically at expectation read. It wasn't a blowout to the upside or the downside. It came in basically right at expectations. It's still above kind of what we would deem as good for the market, right? You really want to see a 0.2 or less to indicate that the annualized version of PCE is going to be much more tame, right? So what's going on from a 4-hour perspective? We just sort of briefly walked through it, but for the most part, the 4-hour downtrend is at least neutral with a higher high here and coming into the equal high from over here. We're not all the way here yet to this prior equal high, but you get the idea that obviously the 4-hour downtrend is no longer really in play. Could we reject here for a double top? It's always possible, but the structure underneath us is pretty solid. This is pretty solid, especially if we just go to the hourly chart now and start walking through the time frames. I mean, very obviously, we are in an hourly uptrend. We're moving from lower left to upper right. There's no arguing with that. That is just a fact. We have lows, we have higher lows, higher lows, higher lows, higher lows. And, we haven't seen a significant hourly pullback as we've got a gap and go, sort of gap fill reversal, and now we're potentially gapping up out of range again on today's session. So there has not really been an hourly pullback to test for the next higher low. So knowing that, right, as a piece of information, knowing that, I would say that it would be totally reasonable on today's session to say, okay, if this market does pull back, it's all about finding the hourly higher low, right? Which, as we know, would be a place where we want to get involved on the bull side of the market. Where could the hourly higher low be? Well, if we take out our support trend line and do something like this, I'm not calling for an outright collapse on today's session. Obviously, the market is responding to this information in a bullish manner, but technically speaking, we could drive and drop at the same time. I have a nasty habit of combining words in my head and then saying or trying to say both of them out loud at the same time. If we drive/drop, which came out as dripe, if we drive or drop into roughly 40.10, it would not be the end of the world. 40.10 is still an hourly higher low. Now, intraday, don't get me wrong, absolutely there will be short opportunities if this were to unfold. Primarily, I would be interested in this gap close from here. But what I'm getting at is the structure underneath us is still healthy. It is still bullish as long as we're above 4010, 4010 in the ES, okay? So that's the pullback level on the higher time frame that I would be most mindful of. Now, if we get a little bit more nuanced, obviously you can see that we have prior highs, and a little bit of support there on the gap fill reversal from yesterday's session. So could we also pull back and find support there? Absolutely. That would absolutely check out as being a bullish piece of information as well. You start to look at this as a bull flag on the hourly, and into the future, we would be mindful of some sort of break in the upward direction to continue this overall hourly uptrend. So we've covered the higher time frames. Let's move on down to a 15 and see what's going on with a more granular approach. We'll ask ourselves the 3 questions and see what's on tap for this morning's session. So taking a look here, question number 1, of course, is where are we opening in relationship to the prior day's range? Here's the prior day's high. Here is the prior day's low. We're obviously opening on a gap up outside of the prior day's range, which does strike me as a bullish piece of information. And once again, as they have been for most of the week, gap rules will be in play. What else? Number 2 tells us to ask about the overnight range. Where are we opening in relationship to the overnight range? Here's the low. Here is the overnight high, the new overnight high, right? The previous overnight high was kind of right around in here. We're opening at the overnight high zone, which of course is more bullish than bearish, but also, as we know, sets up decent risk reward for a fade. So I'll put an up arrow here, but underneath we'll just make note that this has much more to do with risk reward, RR. And as this volatility continues to settle out, we'll of course have to reevaluate because if we're opening in the midpoint of the gap, basically between the overnight high and the prior high of day, then our risk reward for the fade is obviously not favorable on a one-to-one risk reward here. So it's really, paramount that if we're going to actually look for the fade of the gap on the open, then we really want to open as close as possible to the overnight high. We've been talking about these concepts really a lot in this past week's worth of trade in the streams here. So that shouldn't be too out of left field for anybody. Question number 3 here: what is the overnight inventory position? Net long, net short. To do that, just extrapolate the settlement price. Same thing as saying the close from the prior day session. How much time above? How much time below? Obviously, we're net long here with a majority of the time above, and just a select few instances and tests underneath. So I would probably classify this as something like 90% net long. And of course, as this increase in volume happens on the PCE reaction, more folks are getting involved here than back in the past. So being that it's above the prior day's close, again, more of an indication of a higher net long percentage. Now, what do the 3 questions tell us this morning? Question number 3 does tell us that there is rather, an imbalance in the overnight inventory. It is skewed net long, as we just pointed out, to the tune of 90%. So if that corrects, well, question number 1 tells us that, yes, we can look for the gap rules to be in play, and the correction is always to the prior high of day, right? This is what we've been talking about for the past 3 streams in a row. Now, today is obviously different because we have a catalyst which produced this move, and we are also trading in the midpoint, as we just described, of the gap range here. So is your risk reward really all that great if you're trying to fade from here to the prior high of day? If your stop is going to go over the overnight high? Absolutely not. Absolutely not. We just sort of mentioned this. A 1-to-1 here is not a trade you should be taking, but it doesn't mean that the gap rules go out the window. So here's sort of in addition to what we've been describing throughout the course of the week. It doesn't mean that we just forget about the gap rules. It doesn't mean that we're saying, okay, we can long this thing on the open because the risk reward is bad. No, we're still expecting some inventory correction to take place. That's, of course, because of question number 3 here being skewed net long. We're looking for some of that inventory to be corrected, aka a pullback, a fade, to the prior high of day, but there's just not really a good way to get involved in that from a risk-friendly standpoint as we position, right? So do expect still some movement into the prior high of day, but it just may not be a trade you want to take on the open. That's all. So we're still expecting the same psychology. The reasoning behind everything is still the same. Just participating in the trade actually becomes a bit more difficult when the risk reward is not as favorable and we're opening away from the overnight high. So we've got a lot of time between now and 9:30 when the bell ultimately does ring, and we'll check back in on the position of the opening print. But for now, I would say that you probably want to sit on hands on the open until we test the prior high of day or until we break over the overnight high. That would be what I would watch for on a morning like today. So let's rank order some situations here for the open. What I would prefer to see happen is a little bit of a pop and then something that does this, right? I would prefer to see that on today's session, and I would prefer to see an absolutely benign Friday, something that is just so boring that sets up a move for next Monday. I would really, I think that the market has been, I don't want to call it overextended, but obviously we've got some thin gap structure underneath us. And I want to just point out, we talked about this in the prior day's stream, but just because we have a gap underneath us does not mean that the market must come down here and it must close that gap. Markets can start rallies on thin and poor structure, and the reason being, as we know, is just because you have folks with FOMO. Folks who need to allocate capital, folks who want to get in on the rally. They're not waiting for a pullback to fill that gap back there. They're saying, hey, the market's gapped up 3 days in a row now. Obviously, something's changing. The banking crisis is not sending this to zero as everybody thought it would. And, it's time to get on board. And usually they position with the worst possible trade location, at the highs. We suffer an hourly pullback, a 1 hour pullback. And, from there, we reverse as the folks who got in at the top close out. So don't be the person who's, initiating a big new money long up here at these highs. That would probably be my recommendation on today's session, is to not be overly aggressive on the upside. I would be mindful of the gap fill and then just kind of like going sideways, consolidating this big run that we've been on. That to me would strike me as a healthy and, reasonable move for the market. Now, if we do poke and continue to move in the upward direction, we know that we have overhead targets much higher at 4120. 4120, this of course is a 20-point range to be trading for. Definitely worth your time. So if we do get a gap fill and a strong reversal over the overnight high, I'm not saying don't go with that trade. There's some solid range to be trading for. I'm just saying what I would prefer to see from an overall structural perspective is some digestion of this move. And with this upper wick coming in as well, you can see that it's not, even with the beat of the expectation for PCE, the market's not really accelerating hard in the upward direction. We're basically unchanged from what was going on in here in the previous portion of the overnight range. So I'm not really seeing aggression from buyers. It's also not an aggressive sell, right? If we do fall back down into the prior day's range, it's really not bearish because we know that in the hourly scheme of things, we're just coming off of a higher high. So, you could be choppy, you could be neutral through here. There might be some short trades to be had. I think obviously the best short trade is probably breaking down underneath prior low of day. If you fail this structure around 40.60, if you fail underneath 40.60, we know that the target is really here, closer to 40, it's for like 40.47-ish, 40.48. This is the breakout level for the spike on the gap that held from the Wednesday session, right? So that's what I would say about downside here in the market. Obviously, opening on the gap means that it's not going to be an easy trade to pull off in the downward direction. I don't think that it would be wise in the overall uptrend that we're experiencing on the hourly to get overly active on the short side through the value area in here. I think the better shorts are obviously underneath the prior low of day. So probably patient on the short side. Nothing obvious I can see on the open. So that's really about it. I think PCE kind of came out to be a nothing burger. You can see we're really, as we said, there's really no other way to describe it than unchanged. We're basically unchanged. A flurry of volatility, unchanged. Really unchanged. So that's it for the ES. It's a Friday. Let's mention Friday rules as we are walking through this thing here. It's a Friday. So, today is a day where if you're green on the week, you stay green on the week. You don't go out swinging for the fences trying to make it an even better week with, a big grand slam type of trade. Keep your week green if you are green. If you're red, I also would recommend not going swinging for the fences and just say, okay, we're going to take reasonable trades on today's session. I'm not saying don't trade, but just don't do anything that's outsized just so you can try to recapture and close the week out green. More oftentimes than not, it ends up digging you a deeper hole. So Friday rules are in play. You don't want to have any feelings of animosity towards the market as we move into the weekend. You want to go into the weekend feeling good, feeling ready for a relaxing and refreshing time with friends, families, dogs, whatever you've got that you're hanging out with on the weekend. You don't want to be thinking about, damn it, on Friday, really messed up my week because I went full portfolio, SPX puts, 0 DTEs, and it didn't work out, right? Don't be that guy. Don't be that guy or gal. So that's what I've got for you in the ES. Let's see what the chat seems to think is likely for today's session. As we get closer and closer to 9:30, I get it. Still 45 minutes to go, but just really unchanged on that PCE announcement. If you are a market bull, thinking that we go gap fill, reversal, whatever, high or low, and a break of the overnight high, sending us to 4120, give or take, let's see a number 1 in the chat. You are a market bull. If you're a market bear, thinking that we are going to, actually, let's go neutral. I don't know why I said bear, but if you're neutral on the market, thinking that we do something like this is kind of like where my head's at on the day's session. Number 2, neutral, choppy, inside the prior day's range, outside the prior day's range, little test here, little test there, really just going sideways, developing a choppy day. Number 2, bears want to see it go to hell in a handbasket, prior low of day, lower high, threatening a break into the close of the week. Close of the month, close of the quarter as well, right? So number 3 is a big breakdown underneath all of these lows. All right. If you've got no idea what's going to unfold on today's session, a number 4 will suffice in the chat, and we will let that simmer for just a moment. One thing that I do want to mention here is a lot of folks have been saying, it's quarter end, window dressing, money managers want their bonus. They're going to, do whatever it takes to show that they've got the rallying names on the books, and they're, that's why the market's booming right now. You can say whatever you want. I do think that when and if we get a pullback, which could come as early as next Monday, right? We know that we're sitting on an hourly higher high. We know that we're coming off of an hourly higher high here. It's totally reasonable that from a structural perspective, the market pulls back early next week. That would not be the end of the world. But I can already see it. If the market does pull back off of the higher high on the hourly time frame, then everybody who said, oh, it's window dressing, it's this, that, it's the other thing from the money managers, just, tidying up the books for the quarter end. If the pullback happens on the hourly chart Monday and all those folks come out and say, I told you so, I think they're probably saying, we think the market is going to zero and this rally was fake. I would say, on the other hand, that, hey, fine, we've made an hourly higher high. Start looking for the hourly higher low. Until the hourly higher low is disproven, aka underneath 4010, underneath 4,000, the prices have printed. These price levels have traded. We know the structure is here. If we don't find a higher low, then fine. We'll concede that the trend is changing. But if we do find a higher low, then all of you window dressing conspiracy theorists, this, that, the other things, goes out the window. I don't think it's a useful way. I don't think it's a useful framework to look at the market through. So anyhow, I just wanted to make that comment because I can already see it happening. I can see a pullback early next week off the higher high, and everybody comes out and says, told you so. And I'm going to be like, nope, you didn't tell me anything. We're pulling back off of a higher high. It makes total sense to do so from a structural perspective. Anyhow, enough ranting. I just realized because I've been ranting, I didn't type in the clickable YouTube poll. So I'm going to do that now so the lurkers can participate. As we know, they get free chicken McNuggets with code TRADEBRIGADE at McDonald's. What do you think? 1, bull. 2 is newt. 3 is bear. And then 4 is ostrich. All right, that's out there in the world. You can... again, Reese, it doesn't matter if it's like, it doesn't matter if it's a theory or not a theory. Like, at the end of the day, if the prices have printed and the market's traded here, then the structure is at least worth considering. If you're going to throw your hands up in the air and say, oh, it's window dressing, this rally is not real, I'm not going to trade longs, I'm not going to look for upside in the market, then you've really struggled in the past, couple days of trade. I mean, granted, we had some reasonable pullbacks through gaps, and we talked about gap rules frameworks, but to have an overly bearish mentality in this market, if you're anything other than a day time frame trader, you've been getting steamrolled if you're a short. If you've been a short through the banking crisis, if you've been a short saying that this rally is a fugazi because it's just been, window dressing, this, that, the other thing, then you've been getting steamrolled. Like, there's no argument with that. The prices have been moving higher. Okay, so I don't know what to tell you. If you're a short intraday duration trader and you've captured the shorts on the downside when the gaps have closed, then again, congratulations. That's what we're all looking to do. But for anybody with a time frame duration that is longer than the intraday, absolutely flattened if you're a short. Absolutely flattened. So anyhow, I think I'm going to be done ranting and see what's going on with the poll results here. Maybe a little bit of a polarizing take here this morning to talk about the window dressing. But anyhow, what's going on in the chat? 2s and 1s early on, couple of 3s, not very many though. Lots of 2s, lots of 2s. 2s, 1s, 4s, not very many 3s, and that's that. The official clickable YouTube poll is coming in at 45% response rate for number 2 neutral. Yeah, Big Dipper, end of quarter with changes in allotments. Yep. What else? Yeah, free chicken McNuggets. PCE, personal consumption expenditures, right? It's nothing but a counter trend from Xtongue. I know we disagree about this all the time in the chat. All right. That's that. Cool. Yeah, let the chart prove it. We have a friendly disagreement going on. It's nothing, that's part of the fun of the markets here. I'm not, I don't hate anybody for having a bearish stance, and it doesn't bother me one way or another. I think that, the price kind of proves who's right and who's wrong. Obviously, you've got a different time frame to adjust to if you're saying that the market's going to fall in the next 6 months versus what's going to happen on this morning session. But yeah. What else? Coldest Blade. The only result we know is that he's getting these gains, baby. Getting massive, and the muscles are bulging. Blade, are you in the gym right now, man? Are you hitting one of these crazy early morning workouts again? Oh, craziness. Yeah, it's all about time frames. I agree with Ron K. It's all about the time frame of trade that you're on, right? My analysis is very short term. You guys know that at this point. We are kind of like, the point of doing this in the morning stream is to forecast what could potentially unfold as a situation early on in the day's session, between 9:30 and 11:30 or something like that. As the day unfolds, more situations present themselves and we sort of reevaluate. But again, for anybody with a macro narrative, bearish narrative, that's fine. It's just not playing out right now in the here and now time frame, which is, 15-minute, hourly, even the 4-hour chart, right? Maybe something like a weekly is still bearish. Maybe something like, it's really more neutral in my opinion, but maybe something like a monthly is more bearish, trying to find a topping pattern. So cool. Yeah, differing opinions is what makes a market. Absolutely right, Trading Vibes. That is true. That's that. That is that. Yeah, I'm on the East Coast. That's from the chosen one. Definitely on the East Coast. And that's it. And that is it. All right. Cool. Let us move along and let us move into the NQ. We're doing fantastic on time because we started early for the PCE announcement. We've got 8:53 on the clock. Typically, we're getting into the NQ around 9:05, so we're well ahead of schedule. So let's go to the 4-hour time frame chart. How's the chat doing? Everybody feeling good this morning? Everybody doing all right? Everybody sort of hanging in there after our rant and rave on window dressing? Everybody doing okay? Hopefully everybody's doing okay. All right, NQ, 4-hour time frame chart. Keeping it objective, looking at price action alone. Obviously, we're making a new pivot higher high above what's going on over here. Very difficult to say that this chart is bearish. We know that this has seen a 100% retracement of this overall move. And once again, with the higher high, we can now afford a higher low pullback on the 4-hour time frame chart. What do you know? Where would the 4-hour higher low pullback take us? Possibly to this breakout point from in here to close the gap underneath. Actually, I don't think that's actually a gap anymore. If we take a look on the hourly, the 4 hours is a bit deceiving because of the way those candles overlap. Is there gap left there? Maybe just a little bit. Maybe just a little bit of gap there around the 13K mark. But overall, we know that we could reasonably experience a pullback all the way down to here, find a higher low, and continue on our merry way. This has been a straight shot in the NQ, in the upward direction. After the look below and fail, swept the lows, straight shot to the upside, higher high being produced. Now it's all about the higher low finding some support above the top of the range, right? Above the top of the range. No gym for the coldest blade on a Friday. I agree. I don't know if Friday or Sunday is the international rest day, but I also take Fridays off. Got a nice upper body chest workout in yesterday. Trying to get the so just as a side note, because I know coldest blade is and I also know, who was it? I forget who it was. We also have an ex powerlifter in the chat. But I'm stuck at 225 bench, right? 2 plates. It's kind of like that milestone you hit, and it's like, okay, congrats, good to go. But I'm stuck here. I've not been able to move past 225 5x5 on the bench, and it's driving me insane. I've tried different programming. I've tried going, lighter weights for 5 sets of 10. I've tried going a little bit heavier for to build up the strength, quote unquote strength, at doubles for 5 sets or whatever, and nothing can really get me past this sticking point here. So anybody who's got any tips for that, would love to hear. Anyhow, back to the NQ price action analysis. What's going on with the NQs? Hourly chart, we just described the pullback. We just described the higher low. Everything's all good there. Let's continue along and take a look at the 15-minute chart, see what's going on here. Smaller time frame. What's up with the smaller time frame? We're not opening on a gap in the NQ. We are opening inside the prior day's range. So let's walk through the 3 questions. This will be fairly instructive on the NQ. Inside the prior day's range, which always means a balanced indication, but we always ask question 1.5 when we're opening in range like this. So where are we in relationship to the value area? Here's value area high. Here's value area low. Where are we in relationship to value area? Well, we're slightly above, but not by a mile, which also does strike me as slightly more bullish, but not really, nothing substantial here. Nothing substantial out of the NQ on the bull side after looking above the high in the pre-market session. Now we're obviously opening inside a bit more firmly, but slightly, ever so slightly above the value area. So what does this mean? Well, it means there's a divergence between what's taking place in the ES and the NQ. And because of that divergence, you might want to take that as a cautionary sign to say, hey, if these two things are not agreeing with straight up continuation on today's session, aka the ES doesn't see a gap and go, it closes the gap, and the NQ remains in range today. If there's a divergence from that perspective, then, I think it's a perfect storm for saying, hey, it's a Friday, number one. Friday rules are in play. We're getting a choppy day. We're seeing price action chop around in the prior day's range. They're diverging between the ES and the NQs. There's no real reason to be aggressive on any particular direction. Intraday scalps are fine. A little piece of the move here, piece of the move there is great, but any longer or directional trending type moves that you're trying to capture, probably keep expectations of that fairly low on a session like today if these divergences remain in play for the opening bell. Okay, so NQ opening in range strikes me as a neutral data point. If we think about question number 2 in relationship to the overnight range, here's the overnight low just made on the PCE volatility. Overnight high was not tested and was not broken. That's, again, different from the ES, which, as we know, is still technically on a gap. I believe we can go back to that chart in a moment, but it's still on a gap. So, neutral there again, inside the midpoint of the overnight range. Question number 3, overnight inventory. What's the inventory looking like? Well, if we extrapolate the settling price, how much time above, how much time below, and you'll see it's much more mixed, especially as we weight more of this price action here with a higher degree of weight, really, in the read, in the imbalance, and say, it's not 50-50. It's definitely skewed net long still, but probably only to the tune of 60%, right? 60% net long. So not as much shock and awe here in the NQ. No knee-jerk reactions to be made on the open. P for patience is the play as we're getting these number 1 and 1.5 answers to the questions. I think that it's a patience play here in the NQ, especially with the divergence between what's going on in the ES. And as we know, I'm just going to remind you one last time, because in the hourly time frame, we are in a strong and glaring uptrend because we have just produced a new higher high here. It's totally reasonable that even if the NQ pulls back, we can find a higher low and the chart remains bullish. So just don't forget that on today's session. Ideally, we find support in this gray bar zone. I'll give you the numbers. It's between 12,930, let's call it 12,950 up to 13K. Actually, no, what am I saying? 50-point range is probably too large. I don't want to leave you with a 50-point range. 12,940. Let's go 12,940 to the highs there at 12,960. So a 20-point range, a little bit more manageable. 40 up to 60. All right, 12,940 up to 12,960. That range could offer a higher low pullback. Now, of course, breaking underneath the prior low of day, once again, just like the ES, would signify a short opportunity to get here. But when and if we get here, I would be on the sharp lookout for a reversal back in the upward direction. Okay, we've covered the NQ. Now we're sort of back on track from a timing perspective. We'll go on over to the RTY, see what's up with the Russell. And let's not get too zoomed in yet because we need the 4-hour chart. And we'll continue along. So 4-hour bear flag remains in play. That's the first thing I want to make note of. In yesterday's session, we were saying, hey, probably not wise to go long at the top of the range here. You really want to see like this confirmation of the move, right? So Russell is still in the flag. What's that tell us? Well, it tells us that the full-blown risk-on type look is not all the way there. If the Russell were breaking out of this range, then again, that could be a strong force for markets in the upward direction, but we just haven't done it yet. Have not done it yet. Now, I think in the short term, day to day, we'll be neutral in this box, but don't get me wrong, as in the grand scheme of things, like this context, this bear flag context, is definitely not a warm and fuzzy feeling inside as we're looking for potentially stronger recoveries out of the ES and the NQ. Now, here's where you can step in as a market bear, as a window dresser theory, as a whatever, and say, hey, the Russell is screaming risk off still in the context of this bear flag. And I can't disagree with you. I would say, yes, you're absolutely right. This is one data point that says, hey, markets are not all that bearish right now. Or excuse me, I totally butchered that one. Markets are not really all that risk on or bullish right now. And the Russell is an example of that. And I would say, yeah, you're right. But it's just one data point in the overall analysis. I wouldn't be looking at the Russell stuck in this range and saying, okay, I'm going to short the ES into the ground as it's moving in the upward direction just because the Russell is stuck in range, right? One data point. Everything that we discuss is one data point, and all of these data points as a collective come together to form the story of what's going on in the market, right? So all of these different data points come together, and then we get the full picture of what's going on. So the Russell exhibiting relative weakness, still inside of the range, not breaking out, not making higher highs like the ES and the NQ, it's one data point. It's this little tick right here in the overall story of what the market's trying to tell us, okay? So anyhow, going down to the hourly chart, what else can we learn about the price action? We know that we're stuck sideways in the range. We know that we pulled back off the top of it. We know that we closed the gap. Everything's fine and dandy here. Did we find an hourly high or low yesterday? The answer to that question is yes. We have lows, higher lows technically, higher lows, and nuanced, but yes, we did find higher lows. That, of course, strikes me as more bullish than bearish. Well, if we move on down to the 15-minute time frame chart, what do we know about the opening indications here? We're opening inside the prior day's range. So question number one, neutral. Where are we opening in relationship to the value area? Here's value area high. Here is value area low down there, basically coinciding with low of day. That's the value area. So question 1.5 is also telling us to be neutral, where we are where the market is most content for two-sided trade. Question number two, where are we in relationship to the overnight levels? So there's the overnight high. Here is the overnight low. We've got to adjust that, right? But for the most part, we're opening closer to the overnight high. Maybe it's slightly more bullish than bearish. If the bears were in firmer control, probably would have stayed down here, right? So even on the more granular time frame analysis of the Russell, sure, we're at the top of the range. We did see a sharp rejection on yesterday's session, but for the most part, we're getting sideways consolidation. It's a patience play here on the open. There's no obvious short indication yet, unless we breach the prior low of day and start, if we get this, right, lower highs underneath the prior low of day, okay, now we no longer are holding up for that higher low phenomenon, equal low phenomenon, and we'll look for a rollover, all right? So prior low of day is the key pivot point in the Russell. Let's adjust our overnight high to its rightful position, and we'll leave it off at that. All right, so that's the broad market through the lens of futures. We've got 9:05 on the clock. What am I trying to do here? Go to an hourly, back over to the ES, just to see if there's anything different going on here. Nope, no major changes. We're still opening in between, basically in the midpoint of the gap range right now. So nothing really new to report in the ES. So with that said, let's move on over to our cash ETFs. And folks, whenever you see that little annoying white space at the bottom, let me know in the chat. I can go full screen and eliminate it like that. So, S&Ps, what's going on in the spiders? What do we see from a cash ETF perspective? Well, a couple of things jump off the page at me. We already, without even knowing what was going on from an expected move perspective in the ES, you could hear it in my voice that I was like, okay, we've experienced a couple of big gaps in the upward direction. We're expecting a sideways and neutral day to balance up there and digest some of the move. Well, lo and behold, right, even just, without looking at the actual number, just based on feel in the ES, this is what happens when you trade the same thing day in and day out and you watch the same markets day in and day out. You're not chasing penny stock XYZ. You're not chasing, small cap XYZ. When you watch the same reliable thing over and over and over again, you can get the feel for it, right? So it just so happens we're also at the upper edge of the weekly expected move. Is it a good idea to be a new money long at the upper edge of the weekly expected move? Not really. Not really. The options market was pricing in, as of last Friday, that this is kind of where the steam would run out. And that's exactly where we're sitting. It doesn't mean that we can't move higher. It just starts to mean that the risk reward is not as favorable from a posturing perspective, right? So it's just one more, again, just like we talked about in the Russell. It doesn't mean that we go short in the S&Ps because we're at the upper edge of the weekly expected move. We have this ecosystem of data points, right? Russell being weak is one of them. Upper edge of the weekly expected move is one of them. The market internals are one of them. The fact that these gaps did not fill underneath us, that's one data point as well. It's just another data point to add into the bundle of things that we consider, okay? So upper edge of the weekly expected move strikes me as saying, hey, kind of be a little bit more cautious with new money longs up here. We're still watching for the gap to close and then a reversal in the upward direction. I would still say that that's a primary situation always when we're dealing with a gap. We know that we don't adjust the gap rules because we feel like it. We need to stick to the framework regardless of what the market conditions are telling us. We just need to manage our expectations in a different way, right? Market context tells us how to manage our expectations. The framework does not change. So hopefully that's a useful insight as well. But for the most part, what do we want to see? Well, prior high of day, I'll give you the exact number. It's 404.35. 404.35 or above, staying on the bull side of the trade. If we fall underneath and into the prior day's range, you know the deal. Probably choppy through here, especially with a divergent QQQ. So speaking of, let's take a look at the QQQ now. Just for folks who might be longer time frame duration than intraday scalpers, what I would say is just, obviously markets remain very, very bullish as long as we're above 401. As long as we're above 401, there is no reason to be thinking short in the market. Why do I say that? Because obviously our last pivot high was right around 401. If we're above that, we're just putting in, you could call this bull flag consolidation. It's really like hourly bull flag consolidation if we're above that. But you get the idea, right? As long as we're above 401, which is this range, the top of the range, resistance, 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 50 SMA, prior high of day. As long as we're above 401, no reason to be bearish in the market, right? Looking for this into early next week. And if we fall back in, okay, we know that we're back in kangaroo style market. We have another look above and fail into the range. We're going to start to eyeball the gap close and then potentially the bottom end of the range. So the bears will have their day if that does unfold, right? And we'll consider that. But I think it's also worth being mindful that the hourly uptrend would also suggest a higher low pullback could close the gap and do something like this in the upward direction. All right. So anyhow, for today's session specifically, if we're above 401, no reason to be aggressive on the short side. What I would like to see, 404.35, higher low continuation, right? With caution in the longs on the opposite direction because of what we just described about expected move. Okay, moving along, QQQ, NASDAQ 100, what's going on over here? Very similar, exactly the same actually as the NQ futures, but the levels are slightly different. You can see that here is the prior day's range. Now we're pushing into these highs a little bit, but for the most part, we're still in the prior day's range. If we open on a gap, the idea is the same as the ES. Notice though that there's a difference here in the NQ, or I should say the QQQ, that we're away from. Oops, not sure. That zoom shortcut always drives me mad. I'm going to have to try to fix that in Thinkorswim so it doesn't happen that way anymore. For folks who don't know what just happened there with the zoom, if you hold control on your keyboard and scroll your mouse wheel in and out, you will zoom on the chart. You can see that I'm probably driving you nuts by doing that. But anyways, that's what happened. There's got to be a way to disable it with like the hotkeys shortcuts in Thinkorswim. So happens too frequently that it becomes an annoyance. It's not really useful for me at least. So anyways, quick tip for you. Anyhow, QQQ, the numbers. What are the numbers I would focus on? Well, first and foremost, this is the range that we'll just use the container bar, really, which is the FOMC bar from last week. As long as we're above that, which is 315.25, there's no reason to really be overly aggressive short side, right? Expecting that this is going to break out as a daily bull flag, and we see continuation into the upper edge of the weekly expected move and structure at 320.50. Especially after a gap and go here, especially after a gap fill reversal. Again, it doesn't strike me that big new money shorts are entering this market and looking for everything to collapse. Again, if that does happen Monday and the window dressing folks say, hi, I told you the market was going to pull back, then that's fine. But in the context of what's taking place here structurally, we've still got a bull flag. And I'll eat my words. If we fall underneath the base of the flag, okay, fine. The market's changing. We've got a bearish situation on our hands. But we're just not there yet. We're simply not there yet. There's no reason to be bearish unless we break back down underneath through the lows of the consolidation range, 307.50. So that's it. QQQ. No reason to be overly bearish here with the psychology of what's going on. As long as we're above 315.25, I think longs are on the table. Falling deeper into the prior day's range, into the value area, I think it's just a patience play. There's no reason to get aggressive short in here. Maybe on a breakdown of your prior low of day, there's there's a little bit more squeeze to the. I shouldn't say squeeze. I'm thinking like, what's that analogy? Juice to squeeze, or there's more squeeze. The juice isn't worth the squeeze, whatever. I'm thinking that there's more room to the downside, obviously, underneath this structural zone in here, 313.50, which I know is not a level that we have mapped out, but breaching the prior low of day, I think once again, just like the ES, and we target that breakout point that led to the spike in the late day rally from Wednesday, 311.75. So if you do want to short, I mean, it's got to be underneath prior low of day, and it's through this spike here. That's the short setup, and you're not overstaying your welcome on the downside. That's really all I can see for the shorts, right? That's just about the only setup I can see. Anything else is just too firmly counter trend at the highs, right? Too firmly counter trend at the highs. If we continue into the expected move high, right? So if we get a big rally out of the market, let's just draw this in as a final scenario for the QQQ. Here's something you could consider as well, right? Say here's the prior day's range. We get a massive rally out of the gates here, straight up continuation, and we hit the upper edge of the weekly expected move. When we get here, is it reasonable to look for shorts or the market to stall out? Yes, absolutely. Right? So if we get to the top of the upper expected move, then okay, if you start to see inverted hammer, if you see intraday double top, if you say intraday head and shoulders up here at this area, all right, maybe there's a pullback that happens intraday that you can catch. But once again, are you overstaying your welcome? Probably not in the face of a bull flag break to the upside. Okay? So that's how I'm seeing the markets right now. That's kind of what I've got for you there. Next up, IWM Russell 2000 small caps. What's going on in small cap land? Here is a balance range. Here's that 4-hour bear flag, daily bear flag, whatever you want to call it. Something pretty important happened yesterday, even though it was a gap and crap, aka a move in the downward direction. The entire gap faded, right? We did technically produce an equal high up around this 176.75 area, which means that the threat of just straight up lower highs here no longer as much of a threat, right? That threat has been neutralized, so to speak. It doesn't mean that the market has to continue because the threat is gone of a lower high. It doesn't mean that we're looking for a massive upside move. But what it does mean is that, hey, the structure underneath us remains neutral. It's not really forming, an obvious descending triangle, right? And that's probably a terrible illustration. The idea would have been something like this. Highs, lower highs here. Obviously, we're through that. Now, there's still work to be done. If you are a market bull, we've got to get above 176.75 in the IWM. If we're underneath, once again, it's more of a neutral indication for markets. Yes, I would say a context here would provide bearish context. We just described all of this on the Russell futures. I'm not going to rehash all of it. From a levels perspective, the number to watch, it's been very easy this week, right? Just as a barometer for what the market should be doing. Are we above or are we below 176.50? If we're below, this acts as bearish drag. If we are above, it starts to become much more optimistic for longs, right? Especially from a squeeze perspective on everybody who got roasted at the lows here, right? Fake break of 171. So anyhow, that's IWM. We've got 9:15 on the clock. Somehow we managed to make an early morning stream, get right back on track to its normal delays. With 5 minutes to go, we'll cover the core list of companies and see what's going on in the chat. Apple continuing to break towards the top of the range. I mean, the chart setup looks fantastic. We were bullish in Apple after the midweek market update. Saw some follow through yesterday. Partial gap fill, right? Partial gap fill in these lower wicks. And then a rally into the close. And right now we're threatening continuation over 162.75. I think that this is still in play for longs. I would just start to be a little bit more cautious about how you execute those longs around 162.75, right? We're running into this area of resistance after a couple of gaps that got us there in the first place. Again, sentiment probably bullish, looking for longs, but just being cautious of how this actually unfolds, right? You may want to wait for a break higher low above, that's basically your confirmation, and then longs in the upward direction. If we're just chopping around underneath it, I'd be a little bit skeptical of Apple here sitting at resistance, right, on a Friday. Okay? Just being mindful of that. But again, we are breaking out of a 3-day balance. We have a hammer candle that tested the lows. Obviously, no sellers were here. I do think it could continue, again, which is why we're maintaining the bullish stance in Apple, but you just want to be cautious about execution. Probably want the confirmation of the higher low. All right, Netflix. What else? What else? Let's see. Netflix gap and hold yesterday. Really, like partial gap fill. I would have thought that there would have been more gap fill out of Netflix, considering the upper wicks that were forming in here, and just that like people were unloading it after this rally from the news, right? But it held, and right now it's opening towards those highs. Netflix has continued to throw me for an absolute loop, so I'm not sure that I'm thrilled about trading it on a Friday. What does the setup say, regardless of my feelings? Well, we're breaking out of a bull flag. We're holding above it on the prior day session. There was a partial gap fill, so the sellers didn't really do their job completely. We're above the 50 SMA now. If we can crack 343.25, I mean, look left. There's a gap to close here technically. I think you could see some upside to 350. So am I going to be trading this? Again, Netflix has psychologically damaged me, so to speak, as this rally has unfolded. I don't know that I want to participate on a Friday. If you do, it's probably acceptance over 343.25 for continuation. 350 could be on the table. 350 as a target. Next up, Tesla. This is where we're still being patient, waiting for the setup to truly give us what we want here. It's just so it's not giving us exactly what we want, which is the follow through move in the upward direction, right? A little bit of a hold over the prior hammer high, but no real like strong rally into 200. That's still what we're looking for. Some optimism here in the pre-market moving up towards these highs. If we crack the prior high of day, again, think of this as a range. Technically, we're looking for the top of it at 200. Patient longs want the higher low above 200. 213 becomes the target. So Tesla is still very interesting, watching these highs over 197.15, 197.50. If we can clear this zone, I think that longs are on the table to 200. 200, that's kind of my watch in Tesla. On the downside, flushing these lows, right, under 190, so over 197.50, under 195. Very, very simple in Tesla, considering this support. Considering this support, also prior high of day, obviously failing that here, sets up a bear trade, okay? 195, 197.50, based on the daily pattern and what's unfolding here, probably leaning more towards the bullish breakout over these highs to 200. Next up, Google, 9:18 on the clock. How are we doing on time? Doing all right. If you are going to tune out, that's A-okay. Just do me a favor and hit the thumbs up on your way out. It's the only time I ask for it. Google, daily hammer in place. This wick is absolutely maddening, so let's zoom in and get rid of that. That freaking thing. Here's a set of highs, right? It's got to clear these highs. It's got to even go further than that. I hate to say it, but it really does. I mean, it could be a double bottom off of 100 with these two tests here and here, but what does that mean the neckline is? It's still over 102.50, right? So I'm not in love with Google at all in this range. I think it's got to be a breakdown of 100 or a long back over 102.50. Anything else is just kind of choppy and noisy. Even if we get the break of the prior, hammer high in here, which we're opening right around it, opening print, so on and so forth. Look at what you're trading into. You're trading into this noise. Do you want to get stuck here? Probably not. Look here. You got thin structure through the breakdown to trade through. It's 102.50. So 102.50 still an area of interest. $100 key support still. Next up, Metaverse. What's going on with the Metaverse? and Zuckerberg's Fantasyland breaking out over the highs. This is an incredibly attractive trade to be watching for on today's session. Looking for over 207, 208 here. It's really 208 pre-market high, prior high of day, over 208 continuation. We know 221 becomes an upside target. Is the trade fairly obvious? Yes. Do fairly obvious trades sometimes not work out because they're so obvious? Yes. So just be mindful that, you probably want to have a stop loss in play. You can't just buy this and then forget about it and check back in at 4 o'clock expecting to make a killing. So if you are going to look for the break in the upward direction, do so responsibly. Make this a primary focus and use a stop loss on the upside. Okay? Use a stop loss, because if it does fake everybody out and come back down into range, what do we have? Right? What do we have? Let's draw this in. Everybody knows, look above and fail. Dangerous. Number one target should be the gap close, then potentially the bottom end of the range. So you don't want to get caught in that situation, which is why, again, this should be something that you monitor and you don't just set and forget. NVIDIA. What's going on with NVIDIA? Equal highs being made. Massive upper wicks in the pre-market. Totally contrary to what's going on in the ES here and the continued push. So with that information, right, do you want to be, and we've been saying this all week, man, do you really want to be a new money long up here? No. No, we're threatening a break underneath these lows. We would be closing the gap. Actually, there's very, very little gap left technically. I wouldn't really be looking for the gap to close as a range to trade for, but rather just a downside target. If we go further than that, we're just in the midpoint of the range. It's choppy here. There's really nothing happening in NVIDIA. The momentum is gone, right? The momentum is gone. It's still strong. It's still holding up here at the highs, but we've been talking about this theory. I mean, look at the green bars in here. Are we getting solid green-bodied bars? No, absolutely not. Momentum's kind of fading out, which is reasonable. This thing's been on an absolute tear. 130, 280. I mean, come on. Come on. Next up. So that just means probably not interested in NVIDIA at these highs, right? Next up is Microsoft. Sort of a gap fill reversal, staying above the top of the range. That does strike me as bullish information here. Really interested in continuation on the open here up towards next target. So closing the prior gap, 285.55, and then continuation higher than that. The range really opens into 294. So Microsoft is interesting for follow through, as is Meta. So like top watches for me, guys. Just, I mean, this you could probably put 2 and 2 together at this point, but Microsoft, Meta, Tesla. That's where my head would be at. Tesla for the 200 trade, Meta over 208, Microsoft holding the top of the flag breakout here, follow through in the upward direction. And last but not least, we've got the mini beast before we're out of here on a Friday. I do wish everybody a green trading day. Have a great weekend as well. But for now, finishing it off with Amazon, what's going on? I mean, here's a range. We broke the top of it. Now it's all about just finding entries on the long side. Right, finding entries on the long side to move through this thin structure. 108 becomes a target overhead. As long as we're above 101, $100.75, as long as we're continuing to find higher lows above 101, top of the balance range on the daily, it's game on for continuation, I think. All right. So Amazon, watching that upside. If we fall back down underneath, then absolutely, what do we have on our hands? Folks, say it with me. If we fail the 101, $100.75 support here as well, it's a look above and it's a fail, and we will look for downside. But so far, holding up above 101, so far so good. It's a break of the daily bull flag. We're looking for follow through. All right, that's what I've got. Jerry H, thank you so much for the $9.99. The message just says in, so I don't know exactly what that should be construed as, but I do appreciate the $9.99, and a big shout out to Jerry here on a Friday. Anything else in the chat going on here that we need to address? Questions, comments, concerns? Let's see. Okay, so here we go. We're getting into some. If I scroll back high enough, we're getting back into some workout advice, so to speak. Let's see. Let's see. Where is it? Take some roids. Nope, not going to do that. More triceps work. Stop bouncing the bar off my chest. I don't do that. As a matter of fact, I've done the whole pause rep things as well to make sure I'm not doing that. Incline dumbbell. Yes. Incline dumbbell is something that I've always struggled with because of my left shoulder. But regardless, that's a bad excuse. Probably lighter weights, better form, and getting the reps in. So Oscar, I appreciate that suggestion. What else? Nutrition too. My nutrition sucks, man. That's one thing that I've got to admit as well is I do not eat enough. I do not eat enough. Yeah, Blade, that's a really great point that you make. I can't expect to continue to get stronger if I'm not, eating the fuel that my body needs. What else is going on here? Strength of my heart from Crypto Commando. Yeah. Okay. Burning out is for hypertrophy. That's right. To some degree, hypertrophy. You got to get as close. Well, you really have to go to failure if you're gonna go for hypertrophy. You'll probably get newbie gains if you're just lifting heavy weights to begin with. But if you truly are trying to build muscle, you really got to push the muscle to failure. Otherwise, it won't grow. That's my understanding, at least. I could be wrong. We've got some smarter people than myself in there. All right, I think that's going to do it. For the most part, I think we had a great stream today. I think we talked about the pertinent information. Nothing's really changed here on the ES. If we just go back to a 15-minute time frame chart, you can see we're in the midpoint of the gap range. So the risk reward is not so favorable unless there's a very minor pop, consolidation, and then a flush, right? Maybe that's worth trading 2-to-1, 3-to-1 in the downward direction. But, considering volatility, I don't think that it's not going to unfold nice and pretty like we want it to here on the open for the ES. All right. Infornity, if you're still in the chat, you have a green name. So let's go to Boyle. Let's take a look at Boyle. This is a levered ETF, of course, for natural gas, I believe. And it's always going to be in decay. It's always going to have this wacky look. This is not something that you hold for the long term. This is something that you trade in and out of, and you take your profits aggressively in. I mean, I just don't, because let's take is this leveraged as well? Maybe. I thought Boyle was more leveraged, but also natural gas has gotten absolutely slaughtered, right? If I recall correctly, let's go to NG. Yeah. So this was like the thing everybody was talking about, and now, the rally didn't really stick. That's interesting. So maybe those charts are not as skewed as I thought, but regardless, NG, like just looking at the futures here to get a sense for the price action, what's going on. Big gap higher, obviously. Big gap higher unfolding here. This is a widowmaker, by the way. I would not recommend anybody trades the nat gas futures. I don't remember exactly what the dollar per tick is, but it's quite high. And you would have to imagine that as it's trading around a 2 handle right now. But regardless, gap higher, gap rules will be in play. The psychology is still the same, even on something like natural gas. From the daily perspective, like what I'm interested in is if this is going to turn into a stronger bottom, then it probably wants to do something like this, right? Treat this as almost like an inverted head and shoulders neckline. It's not really that clean, but something right around in here, 217-ish. If we can hold above 217, the round figure, right? Not an intra-tick move there. That does strike me as probably a bit more positive for a reversal out of this type of pattern. Otherwise, I think you're just chopping around here at the lows, and the risk is for testing the equal low, right? This should have, in theory, brought in more of a reversal. It didn't. It just simply didn't. So I'm not a natural gas trader. I know that there are folks who are really dedicated to understanding the natural gas market. It's not me. So I can just give you my technical perspective. And again, 217, 215 maybe, 260. Again, these numbers are so odd, so foreign to me. But if we're above this zone, I would just, as my final comment on the NG, if we're above 215, above 216, I would say that it's probably trying to look constructive for a reversal here. If we're below it, obviously becomes a little bit more concerning. You get bear flag, right? So that's that. And that's it, I think. I think we've covered all the questions, comments, concerns. Starlight, thanks for the 5. Just scrolling down through the chat now. Oh, man, Colas Blade, you're an animal, man. 6'4"? Sheesh. All right. Well, I am average height on a good day. Male average height on a good day, and I certainly don't weigh anywhere near 250. I'm clocking in right around like 145, maybe on a good day, 145. So gotta eat more. Just gotta eat more. Eat more food. Gotta be more disciplined about breakfast or like midday meals. Midday meals. All right, that's gonna wrap it up. We've got about 30 seconds to go until the open. You know what we haven't done in a very long time? You know what we have not done in a very long time? Let's do the first 5 minutes. Let's do the first 5 minutes. We'll just see what's unfolding here in the ES. Obviously, a little bit of a dump here as we're approaching the bell. 10 seconds to go. Drink some calories. The protein shake I have afterwards. No way, John. Not even close to 190. Like 145. Okay, so there's the bell. Let's go full internal screen just to see how they opened up, and then we'll make some comments about lifting again in just a minute. Let's focus here for the open and then see what's going on. So the reason I'm not really that thrilled about trading the gap rules, obviously, was because of where we were opening. There's no risk reward here, so I'm not going to take an early morning trade on a fade for that to unfold. You can see that it basically already happened in the blink of an eye. For all intents and purposes, the gap has filled. You're not going to trade for like 3 ticks down here at the lows. So that's somewhat interesting. On the open, internals have opened up bullish. So for folks who are just listening and possibly don't have the screen pulled up, we've got 4.4 on the NYSE, 2.1 on the NASDAQ, and 2.5 on the Russell breaths. The advanced decline line opens up around 1750 in the upside on the NYSE, and the ticks are well extended around 1300 for our open. So internals are definitely bullish on the open here. The market has rallied slightly off of the very fast and snappy gap fill reversal off the prior high of day. And the next setup that we're really watching for is, okay, we've closed the gap. Are we going to find an opening range in this sort of gap area that we've made in the pre-market session, which was under the overnight high 40.9850? And if so, like if we're just going to noodle around in here, look for the opening range. We will be constructive on bullish internals for upside moves. And then if we break down into the prior day's range, we know the deal. It's probably going to go choppy and sideways for the session. So sellers kind of trying to hang out towards this area where we rejected after the PCE announcement, but so far just hanging in there, and the internals do remain bullish. Let's take a brief peruse through the core list of companies on 5-minute charts, talk about the 5-minute opening bars here. S&Ps, let's get a load there, Thinkorswim. Thank you very much. S&Ps hanging out right at the upper edge of the weekly expected move. We just talked about bullish internals on the NYSE as well. QQQ inside the prior day's range. You should be watching here for a potential break over prior high of day. That's a trade to be watching for upside. Next up, IWM at the top of the daily balance range at the lows that make up the bear flag. Nothing really impressive yet on the open. So far, actually rejecting 176.75. What you want to watch for here is probably the flush. Let's go. We really need the trifecta chart. So what we'll do, let's detach this and we'll throw it on a different screen. All right, that's good over there, so we can keep an eye on that, but we need the trifecta. We need the trifecta, and we'll go with IWM. Good. Okay. IWM. The short is really much better. It's quite far away, to be frank, but 176, under 176, a little bit more interesting on the short side to move through the thin structure. Look at the hourly, right? Look at the hourly. 2 equal lows, obviously an attempt to make support there. If we break down underneath, bit more meaningful to the downside. Let's go Apple, and now we'll run through the core list as we intended to do. Apple upside still looking great. Netflix choppy inside the prior day's range, no surprises there. Tesla, how are we doing? Above the prior high of day. Love the hold of this. So Tesla will be a watch into or just for continuation in the upward direction. Still some room to go. Would love to see, like, because of the way that this is unfolding, pullback above VWAP would be fantastic here, or just any consolidation on the 3-bar play, great. Next up, Google. Inside the chop range that we described in the session from the morning. Meta, breaking that 208. Watch again, all of these setups here, folks, are watching for pullbacks that find higher lows above a VWAP or something above the 208 level. Then it's game on for upside in Meta. Next up, NVIDIA, rallying up towards the prior high of day, but as we talked about, kind of skeptical of that stock right now. Microsoft, very similar. I would say that the Tesla and Meta breakouts look better. And then Amazon, last but not least, the mini beast. Hanging in there, but I'm not seeing the obvious long. So like focus is probably going to narrow into Tesla as well as Meta on any pullbacks that hold 208, or in Tesla we're looking for that hold, anything that's above 197.25, but pullbacks above a VWAP or something like that. The way to see that would just be over on this chart, right? So that pink dot is the VWAP. So we're going to continue to watch those two. Those two are the primary focus, Tesla and Meta, on the sort of consolidation / pullbacks. It's difficult to show, like, I got to bring this back over if we're going to check back in on the ES. That's why the beautiful thing about trading is having multiple monitors. Highly encourage anybody who doesn't have multiple monitors, make that your #1 priority as an investment into your setup, is get yourself some more screens. Anyways, internals remain bullish after now the first 5-minute bar has closed out. So we're still looking for upswings in these stocks that we've just talked about. Tesla, there's your deeper pullback. So now watching for a 3-bar play over these highs or something like that to set up. That would be the focus there. ES remains bullish towards the high of the overnight session. Nothing really deteriorating from an internals perspective. I think that's it. I think that's really it on the open. I think we need to still look for these breaks in those two setups I was just referring to. Meta looks like it's off to the races, not really offering a pullback yet. So you guys know where my head's at. I'm watching Meta for any pullbacks. I'm watching Tesla, right, for an inside bar breakout. So with that, I'm going to wrap it up there so we can focus on these two things and the execution of those trades. That's where I'm taking the day. All right, that's where I'm taking the day. Tesla and Meta. All right. So that's going to wrap up the stream. I think we're going to call it at that. 2 monitors isn't enough. Yeah, you probably need 3. You probably need 3. Anyhow, appreciate everybody being here. Thanks for tuning in. Hopefully you have a great trading day. Have a great weekend as well. And we'll talk soon. All right. Like the video on the way out, as John Cardozo says. And with that, we'll catch you in the next one. Adios, folks.